Hey, this is CatsMeow492. This is going to be an update analysis on SPY. We are going to be using as our indicators Arun, MACD, MA200, MA50, Super Trend, and RSI at some point. So for the resistances, we are probably not going to do Fibonacci retracement again. I have not found it useful on SPY. I think volume-based analytics has worked a lot better on SPY so far, so we're going to go with that. I'm going to show you how to do that. I might use the KDJ today too. I'll show you how to use that. That's very similar to the MACD in that it uses two moving averages. The difference being is that there's a third line for the rate of divergence between the two moving averages, as opposed to the MACD, which is just the integral of the two moving averages. So that can be useful in measuring market momentum in a way that's a little bit more nuanced than the MACD. All right, so let's get started. As always, we're starting on the weekly and daily charts and figuring out where our resistances are. If you follow along with my technical analysis, last week I predicted take profit targets of between 260 and 280, and at one point we were down to 273, so you should probably start looking for places to take profit. Now on the weekly, I have found the MA50 very useful as a support for SPY in the past. If you can look when we scroll back to similar trends, similar bearish trends, anytime we've ever had a big drop, we've usually bounced off the MA50. So you can see here, MA50 was a support. You can see here, MA50 was a support. You can see here, it bounced off the MA50. Here it went under, which is kind of rare for SPY, so that can happen. But as responsible traders, we're usually looking for exits, not stupid reasons to stay in. So let's go ahead and start plotting supports. So we're just looking for places of very high volume, and we can either go top bar, mid bar, bottom bar. No place is wrong. It just depends on how safe you want your take profit targets to be. So if you want to be safe, you go top bar. If you kind of want to be middle of the road, you go middle bar. If you just want to ride it out till the minimum possible end, your puts, then you go bottom bar. I tend to like to go top bar, and then once I've hit my bar, I set my stops. And then just ride it out afterwards. So we're doing a horizontal line at the top of the candles associated with the highest volume points. So you can see this green one right here, no surprise, we've run into a support. We get a green bar, people are buying in thinking this is the bottom. It's probably not the bottom, but in the weeks ahead, I would be careful about staying in a position for more than a day. You can see that these supports are so close together. They're only about $16 apart. We got our big roller coaster ride here. You should have made most of your money if you followed my analysis. You probably took out a put at 289, 290, somewhere around then, and you should be looking for a place to sell off that put and find a re-entry right about now. I'm not sure how much more I would ride out on this SPY trend. Like I said, in the past we have gone below the MA50. It doesn't happen often though. I'd say 8 out of 10 times we just bounce right off the MA50. And this is the MA50 here. Let me change the color of these so this is a little bit more obvious. The red ones will be the volume supports, and the blue one is the MA50. And I'll go ahead and label that too. So looking at the indicators on the weekly, we have an Arun sell signal. As you can see on the weekly, that happens a decent amount of times, but they have tended to be short-lived in the past. maybe a couple weeks of a sell signal. There's also been a lot of signal noise. You can see you got a sell signal here, and the market just rose up again. You got a sell signal here, which was accurate. Your rune is not going to be too useful on the weekly charts. The MACD shows bearish signals. The yellow line is under the blue. In other words, the short moving average is under the long moving average, and there is an increasing divergence downward between them, as you can see with that big red bar. So we've got a good idea what's going on in the weekly. Let's move on to the daily. The daily is much the same story, except the rune signal is a bit more clear of a sell. MACD looked like the moving averages were converging for a minute and then begun to diverge again. So I definitely wouldn't feel comfortable entering in any particular situation or particular position right now. But if you're riding one out, it's definitely not a terrible idea to continue riding it out. I would set my stops about 15% outside of the average true range. So let's bring up the average true range, see what that is right now. Average true range is 1233. So that's a huge average true range. I didn't see that coming. I thought it'd be more like the historical ones, like between 3 and 4 it looks like. But it is widened to 1288. And I don't think that's going to be a useful stop. I would use the somewhere between that and the more historical average true range. So I'd set my stop at about $6 above the current market price, which is $279, $285. I would even set it tighter than that because we're bouncing off of a support right now. And on the weekly, we don't have very far to go down before we hit the 50 MA. Because I have to imagine, based on the way the last couple weeks have gone, I would prepare for either a kind of green or a kind of red day tomorrow. So we could hit another green day like this, probably a bar up here, or we could break through the support. It's kind of an indecision point. That's what happens at supports. So the MA50 is going to move forward a couple dollars here, probably like 267. So maybe the max reward on there is another $5 decline or something like that, while the max risk is much higher. So maybe a better way to plot your stops is to just look at your risk reward ratio and figure you could only make maybe like $7 more, so you only want to risk like maybe a $5 rise or something like that. So maybe stops should be somewhere around like 282, 283. And then your take profit should be somewhere around 267. And then after that, you should be looking for a new re-entry, a new short position. Preferably when the RSI is overbought again. Whoa, let's see, on the 1 hour chart, we still have sell signals from the rune. It looks like the MACD is about to reverse. Let's get rid of the ATR and bring in the RSI so we can look for entry points. RSI is trending toward neutral territory. If you remember from my last analysis, I said that 35 and under is oversold, 75 and over is overbought. So in a down market, we're looking for an RSI above 55 to find a short entry. "30 minutes is pretty much the same story. So that's pretty much all I have for you on this one, I think. We're still in a bearish trend, but we're not really sure how much longer it's going to continue. We're going to hit some significant supports here. If you've been in when I said to get in 289, you should probably be looking for an exit at this point. This trend, I don't foresee us being able to ride out much longer. Once we break through these supports, if we get under this, the bottom pretty much falls out on this entire analysis, and who knows what's going to happen to SPY and the market in general. We could go into a full-blown recession. Anyways, thanks for watching. I'm going to put my Webull referral link down below. I see a lot of people on Reddit are still using Robinhood, which I have to ask, are you fucking retarded? I have lost plenty of money on Robinhood, and if you're still there, get the fuck out. And if you switch to Webull, you can use the exact same charts, the exact same indicators, the exact same way as I am. So check it out. Thank you.